Good evening, everyone. Welcome to our monthly meeting. Uh, this is the outline for this month's meeting. So, as usual, first we will discuss the market outlook and then a couple of stocks from the fundamental side, then technical outlook and a few stocks from technical and that will be followed by the derivatives team. So, we will begin. What we saw in the month of September that uh, there was a sharp correction and globally we saw a bounce back across various asset classes in October, be it equity, oil, metals, bonds, and also we saw some correction in energy prices of coal and gas during October, which were holding up in previous months of August and September. So this improved the sentiment somewhat that going forward the inflation will decline. If we look at the Fed, then the aggressive stand is likely to continue in the near term, where they will continue to increase interest rates as headline inflation is still holding up above the 8% mark. Impact of Fed tightening has now started getting visible in corporate earnings to some extent, and a few corporates in US have started expecting weakness in coming period. Uh, uh, as far as India is concerned, the corporate earnings are reflecting the impact of high energy prices in some sectors like cement, while there is correction in commodity prices in other sectors like metal. For IT, international demand, especially from US, is still holding up, but managements are warning and are cautious for future demand. Banking sector continues to perform well, while margin improvement that was expected in the FMCG sector from Q3 onwards shall not materialize as earlier expected, and this is the reason that HUL corrected post result because of this guidance. So overall, if we look at Q2 results until now, it has been mixed bag, but a clear winner over here is the banking sector, which has seen good expansion in net interest margins and a decline in credit costs, which has led to increase in ROA. A recent upmove in Nifty has taken its valuation to upper end of the long-term pre-COVID range. Considering lower than long-term average earnings growth, which is expected over next 1 to 2 years, as well as liquidity tightening across the world and declining exports growth, we feel re-rating at this point is difficult, and this will restrict further upmove in the near term for Nifty. We expect Nifty to trade between 17 to 18,000 range in the near term. We will now move on to the fundamental stocks that we are going to pitch for this month. The first stock is Birla Corporation. I will now invite Avish to take the call forward.
Yeah, good evening, everyone. So the first stock for the monthly is Birla Corp. Birla Corp is a flagship company of MP Birla, with the core business being the cement manufacturing. The company has installed capacity of 20 million ton across 11 plants at 8 different locations. The company is aiming to reach installed capacity of 30 million ton by 2030, with a capex of 8,000 crores, mainly through organic expansion. With the company is likely to generate operating cash flow of around 1,000 to 1,200 crores from FY24, with net debt unlikely to increase from current levels of 3,500 crores. The company recently completed its major capacity expansion of 3.9 million ton greenfield unit at Mukutban, which is expected to significantly aid in company's sales volume and profitability. The company further plans to increase its capacity of its Kundanganj unit in UP to 3 million ton from the existing 2 million ton, and is also setting up a 1.2 million ton capacity at Gaya. The company has been taking various measures to mitigate rising input costs. The company has a captive coal mine at Sial in Madhya Pradesh with a capacity which was recently stepped up by 20% to 30,000 tons per month and now caters to 41% of its total coal requirement in FY22 at a stable cost. The company has also accelerated its development of Bikram coal mine, and its production is expected to begin by the end of FY23. Apart from this, the company has also increased its usage of alternative fuel and raw materials from 4% to 12%, and has also increased the share of WHRS and solar energy from 22% to 23%. Um, the recent expansion of 3.9 million ton is eligible for government incentives worth rupees 2,300 crores for the next 20 years, which the company is likely to accrue at 650 per ton for sales within Maharashtra from the second half of FY24. The recent ramp up and the higher utilization of WHRS should drive better profitability for the company from FY24. We expect EBITDA per ton to improve to 900 to 925 per ton post FY23 as the cost starts to taper, which is likely to be the key trigger for the stock. The company, as on FY22, the company did a EBITDA per ton of rupees 760. The company operates in lucrative central and northern regions with some presence in the eastern region as well. Both the central and northern region will witness relatively lower pricing volatility given its favorable demand supply dynamics. With assembly elections in Uttar Pradesh, we expect good demand from the state, which is a key market for the company. The stock is trading at an attractive valuation of 7 times FY24 EV by EBITDA. We value the company at 7.5 times FY24 with a target price of 1295. Thank you.
The next stock is CSB Bank Limited. So over the last few months, we have been pushing a few banks aggressively, like Karur Vysya Bank, DCB Bank, and also Ujjivan Small Finance Bank. This is one more bank where we think it is higher on the quality parameters and is still available at cheap valuations. CSB Bank in its older avatar was called Catholic Syrian Bank, and it has been in existence since more than 100 years. Although the loan book is still at just around 17 or 1,000 crores. There is a then error which shows 1,000 crores. The actual loan book is 17,000 crores. CSB operates through 604 branches spread across 16 states, 4 union territories, and 3 major states for the bank are Kerala, Tamil Nadu, and Maharashtra. Where in each state contributes 29%, 28%, and 24% respectively. Now, what changed in the bank is that in 2018, Fairfax entered the bank as a promoter, and it led the turnaround. CSB has strengthened its entire top management team by recruiting various business heads from leading private banks like Axis, ICICI, HDFC, Yes Bank. So just to emphasize a bit more on this, the current managing director is Mr. Pralay Mondal. He is joining from Axis Bank, where he was heading the retail department over there. And he was recruited by Amitabh Chaudhary, who is the managing director of Axis Bank. Specifically, Amitabh had recruited Pralay to handle and scale up Axis's retail department. Before Axis, Pralay Mondal was heading the retail department at Yes Bank between 2012 to 2019. And before Yes Bank, Pralay Mondal was heading the retail department at HDFC Bank. So he is very well known in the industry circles, and looking at his commentary since last couple of years post listing, we believe that he has what it takes to set up this bank, which was typically an old generation south focused bank, to new age private bank with all the product suits which are there prevalent in new age private banks. So we believe he has the potential to scale the bank in the retail and SME side as well. Currently, if we see, the bank's main focus area is gold loans, which is 44% of total loans, which has been driving the overall growth for the bank. Gold loans have grown at 30% CAGR since last 5 years, and this trend is likely to continue going forward. With the new management having firmed up plans for product-wise plans for each of the segments of retail, SME, corporate, the non-gold book, which is 56% mix, will gradually start to grow at around 16% CAGR going forward. Currently, as on last quarter, the growth was a bit low at 9-10%. But we feel that once market notices that even the non-gold book has started growing, then the confidence of investors will increase and bank will get re-rated. So overall, if we look at the total loan book, we expect 24% CAGR for next 3 years. One more good aspect for the bank, since the gold loans is almost 44% of total loans, naturally this gives them good pricing power, and net interest margins for this reason are one of the highest at 5.3% in FY22. And we feel these kind of margins are sustainable. Also, asset quality is pretty good. Net NPA at just 0.6% today versus 4.5% in FY18, at the time when Fairfax acquired the bank. So they have cleaned up entire asset quality. AUM growth, I just told, 24% CAGR. ROA has been steady at 1.6%, and we think that this is sustainable going forward as well. Currently at a price of 230 rupees, we are getting the bank at just 1.1 time valuation FY24 basis for ROA of 1.6%, growth of 24%. So we think that all these metrics are very attractive, and we value the bank at 1.7 times, which is the same as City Union Bank's 10-year average multiple, looking at a similar kind of metrics that CSB has vis-a-vis City Union Bank. So that's our second pick. I will now hand over the call to the technical team.
Yes, thank you, Jihan. Good morning, all of you. Yes, coming towards a technical perspective on the Nifty, in the month of October, we have seen a very good rally on a positive end from 16,700 levels towards 17,800 mark. So almost 2,000 points rally has been witnessed into the market within a span of a 1 month as such. Looking towards the technical perspective, 18,000 is acting as a very strong resistance zone for the Nifty, which comes at the 17,800 to 18,000. That is a 200 point is the very strong resistance zone. From the last two trading session, we are witnessing that the Nifty has just touched the feet of 17,800, and somehow it has just manages not able to give a closing above 17,800, which gives some sort of a cautious sign as of now. Once it manages to give a breakout of 17,800 level, then 18,000, 18,300 levels can be tested in the coming few trading sessions. Whereas on a lower side, 17,500 will act as a crucial support level provided by its 50 DMA. So if as long as the Nifty sustains above 17,500 levels, the view will remain a positive, and the pullback rally can be witnessed on the higher sides. Any move below 17,500 will witness some profit booking into the market, which might take a Nifty towards 17,200 to 17,000 levels on the downsides. But on the continuous basis, we are witnessing a very stock specific movement into the market. There is a rotation we are witnessing into the market. One day the banking stocks are really doing well. Another day we are looking towards a positive momentum into the mid caps and the IIT and the auto packs. Is something like that the market is going on. The market will remain a volatile in the coming few trading sessions, but any breather for a few coming days from here onwards will make the market healthy, sure. So the one should remain cautious at the higher levels since the market is trading at the resistance levels, but stock specific ideas can be generated and can be maintained on the long side with the strict stop losses. Coming towards the bank nifty supports and the resistance level, we are witnessing that from bank nifty has just quoted a high of 41,600 levels, which are the major cluster resistance level. If we look towards the monthly or the weekly chart, we have seen that the bank nifty has thrice quoted a high of 41,600 level. So that will act as a very strong resistance level. Any move above that level, that is 41,540. Upside door gets open for 42,320 to 43,370 levels on the higher side. So it might be a bank nifty who might take a nifty on the higher sides. Whereas coming to the support level, 39,750 will act as the first immediate support level for the bank nifty. Any move below that level, 38,700, 37,500 are the likely levels can be seen on the downside. So the view will remain a cautious on both the indices as both are trading into the nearby its resistance level. So one can be just be a light into the long positions, but they can hold on sure short, but with the strict stop losses. Coming towards the stock specific, this month we are generating a 2 buy call. My first buy call we are recommending from the technical desk is a Shipping Corporation of India. If we look towards the chart which has been posted on the right side of this PPT, that the stock was trading into the downward channel since 2022, the initial days. And from the last 2 weeks, we have witnessed that the stock has given the breakout of the trend line. It is maintaining a very positive closing above the trend line, which gives a very good sign. The breakout has been witnessed with the decent volumes. So it's very strong breakout on the technical front on the weekly chart. The volumes are really doing well along with the price momentums. Also, the interesting fact that the stock is well placed above all the important moving averages, trading in the formation of the higher tops and higher bottoms, suggesting a potential up more in the near terms. The interesting observation on the this chart is that my momentum indicators such as the RSI is showing a positive crossover as well, which shows that the stock has a strength and we are likely to witness the upward rally at least minimum towards to 140 to 150 levels on the higher sides. So one can go for a long position in SCI at the current market price. If you're getting any dips towards to 122, one can just add on. Stop loss can be kept at 116 for immediate target of a 150. Coming towards the next topic, next we are also generating a buy call on Tata Communication. If you look towards the chart, I have just drawn the one formation that is a chart formation which comes to nearby its cup and handle formation. So the weekly chart suggests that this particular counter has just formed the cup and handle formation on the weekly chart, and it's on the verge of giving the breakout of that formations. The breakout level for this particular counter is 1240. So if the stock manages to give the breakout of 1240 on the closing basis, then definitely next week we are going to witness a very good kind of a rally on the higher side, which might take a stock towards to 1440 to 1500 levels on the higher side. On the technical front, after a sharp fall, the stock has managed to form a such kind of a bullish pattern. Also, it is now well placed above 50 DMA, which comes straight around 1190. So that will act as a crucial support level for the short term period. If you look towards the chart itself, I have just drawn the cup and handle formation. As of now, it is in the consolidation phase of this particular pattern. So it will be a conditional buy call on this particular counter. Any move about 1240, one can take a buy call. Any if you are getting any dips towards to 1190, one can add on. We are looking for a target of 1440 and 1500 on the higher side. So that's it from my end. I request derivative guys to take a call forward.
Yeah, thank you, Swati. See, on the derivative side, the current month rollovers for October were in line majorly. So the open interest was, more or less at the same levels. I believe Bank Nifty open interest was lower, a little lower than the average. Um, market-wide rollovers, however, were above average than the 3-month and the 6-month averages. But all in all, it does suggest that the previous month trend that was bullish should continue. However, there will be some resistances on the way, and that can be passed going forward. But at this point of time, as the Nifty falls towards 17,700, 17,600, it's a good buy from the rollovers that has been witnessed. The open interest in the November series also suggests bullishness only. There is a resistance at 18,000 and 18,500 levels, but in between you're seeing a good build-up of puts from 17,700, 600, 500 strikes and even 17,000 strikes. So we will see good support area in between this 17,700 and 17,500 range at this point of time. So it's a positive development, and looks like we are likely to witness a good expiry. At least the first half should be good for the November series. The PCR also has opened at par. It is just near 1, and the VIX majorly, this was one area because of which you are seeing these drastic moves, in Nifty, where it moved to 18,100 1 month, and the next month it came down to 17,000 levels. So now the VIX has cooled down below the 20 levels, and it has come to 16 odd levels, and which is a very good sign according to me. VIX coming down means the risk also comes down, and you can see a trending move in the Nifty, and that can be on the upside as well. So all in all, most of the indicators are positive, and that's why we believe, at least from the derivative perspective, that some amount of buying should come in. From the stock specific front, we've tried to see stocks which have low open interest. That means the shorts have been covered in these stocks, and very likely, we'll see these stocks moving up at least in the first part of the expiry. So these stocks are Coal India. A good pattern, also a higher top higher bottom formation, good delivery patterns, but the open interest has come down. That means the shorts are exiting the system, which is good. M&M Finance, 5-year consolidation breakout, along with falling open interest. That means the shorts are out of the system. HDFC, AMC, Maruti, and Divi's Lab. Now Maruti had results today, but the open interest was less. That means not many people were short, and you saw this move coming in because there was low open interest. You could see that amount of open interest being built in today on the long side, and Maruti going up today. So that was that. Again, Infi TCS have been coming down from several months, and post this, you're seeing Infi having low open interest. So this is a new thing for Infosys, because shorts are out of the system now, and that's why you did not see much fall in Infosys, even though the IT sector was falling. So I believe Infosys also should witness good amount of buying going forward. So these were the stocks from the positive bias for this month. There are some stocks which with very high open interest, like IndusInd Bank and the FMCG pack as a whole. So the theme for this particular month is that the FMCG stocks are likely to witness selling. Dabur, HUL, Asian Paints, Jubilant Food, Tata Consumer. These stocks are high on open interest, and very likely a lot of people own this particular stock. So you are going to see some amount of profit booking in these stocks going forward. So that's the list of the stocks which we think should witness a sizable correction in the coming days. So look out for the same. Next slide, please, Jihan. We've given a strategy on Nifty. It's a long strangle. you've got to buy the 17900 call of the 10th November series and buy the put of 17600 strike of the same series, 10th November. That's the weekly expiry, not the current month, current week expiry, but the next week expiry. The total outflow comes to around 255 points, but the target for the same is around 400 odd points. So we believe market is likely to move in the next couple of days, or probably it can take about 4 or 5 days, but the move can be about 300 to 400 points. And if that move comes in, you are going to see a good profit in the strategy that we are suggesting. You can keep a stop loss at around 180 points, and in between 17600 to about 18,000 levels, you don't make any profit. But once that move comes in, you're going to make a good amount of profit in either direction. So that is that. Next slide, please. So we've given a bull call spread on granules. So pharma as a whole looks very good, and we believe granules can outperform a lot of stocks. It can go up toward the 400 levels. 400 is its cap. Some resistance is seen around 400 levels, but that 400 can be touched. So one can look to buy the 370 call of the monthly series for granules and sell the 400 call. The total outflow comes to around 9 rupees or 9 points, and the total profit that one can make is 21 points in this particular strategy. Max loss is also only 9 points. So either you keep a stop loss of 5, or you don't keep a stop loss at all, and hold it for that target of our the max gain target. We believe this stock can really outperform, a good, very good pattern with good open interest built up. So we are suggesting to buy the stock, for this particular expiry. In the last series, in the last month, we had given Sun Pharma, whose target was achieved, and also, the Nifty strategy was also booked in profit. So all in all, look to do this strategy. It can make good profits going forward. So that's it from our side. I'd now like to ask anyone to please type in your questions, and we can probably answer some.
We request everyone to please post in their questions in the chat or in the Q&A section.
Yeah, so there is a question on PEL, bought at 1120. Just a second, I'll just take that up. So the chart is negative, and the selling has started from October last year. So it has broken below an important support of around 900 odd, 880 odd, and very likely this stock can see some more selling and come towards the 725 730 levels, which is where I expect some buying to come in. But at this point of time, some more consolidation selling can take place. So if you can wait till 720 odd, wait, or exit the stock at this point of time would be a good strategy.
Yeah.
The USD INR, this is not the right forum for the view on USD INR. There is a separate forum for this, so please ask there.
So on PEL, even fundamentally, we are not positive on the stock. Almost 1/3 of the book comes from retail side, which they acquired from DHFL, and 2/3 comes from their developer book, which is not granular and which doesn't get good valuations. So, and company has guided that over next 5 years, this mix will reverse and retail will become 66%. But that is to be seen how they are how they do that. And even overall, housing finance companies, they are having a tough time because of rising interest rate scenario. It will be even tougher to achieve decent ROAs. So for the time being, we recommend to avoid PEL. There is a question on RBL Bank. See, RBL Bank result every quarter we are seeing that it is disappointing. Slippages remain at elevated level. Even quarter 2 slippages were higher than quarter 1. But looking at the valuations, they are attractive, and there is a rumor going on that the RBI appointed nominee director in the bank will soon be taken away as per their forensic audit. Nothing negative as such was discovered in the asset quality side. So if this were to happen, then this will be taken positively by the market. And overall, we think that it is a value stock. Currently, if somebody has a long-term outlook, then they can look at RBL Bank. But from a next immediate 3 to 6 month point of view, it is possible that stock may remain range bound. And as it is, there are a lot of good banks delivering good results. So there are plenty of options in the banking side.
Yeah. So there is a question on KPIT Technologies. For the year, the company has raised its revenue growth outlook to 31 to 32%, with organic growth outlook raised to 23% plus, as against 18 to 21% earlier. EBITDA margins is expected to be in the range of 18.5 to 19%. So outlook is positive on the company. Thank you.
Yeah, so there is a question on Asian Paints. I'll take that up. See, Asian Paints has high open interest after a long time. So what generally happens is when the open interest is high, after a point, you cannot build more open interest. You've got to shed positions, and that is why that liquidation comes in. So on top of that, there is a double top kind of a formation in this stock. So most likely, this stock will witness more selling coming in, and that is why I believe. One should be exiting the stock at least on the long side for some time. The highest call base is around 3200, and if you see the 3000 put has the highest put base. However, I'm not very sure if the puts are very active, but that won't make much of an issue if the stock is falling. The overall view is negative, and that's why exiting should be a better option going forward on the long side, or you can short below the 3000 levels. There is a technical view on Ambuja and Poonawalla. Again, Ambuja Cement, very high open interest, also made a huge top. In a particular month, this stock went on from 350 odd to about 600 odd. And in a month, whenever such a move comes in, there is a likely consolidation or a sell off from there. That is what is happening in Ambuja. Even though it might not go down, but I have serious doubt that it will go up very soon. It has a strong resistance around the 540 odd levels. Looks like some selling will keep coming in from those levels, and on the lower end around 480 490 it has support, so it can come till those levels. Now talking about Poonawalla, again, Poonawalla, good move, but this stock has moved up quite a bit in the last 2 years. From 17 18 levels, this stock has come to about 320 330 levels. So after a point there has to come a phase where consolidation or selling will come in. The RSI divergence is also seen on the longer term charts, which is negative, and the stock can look to correct up to 250 to 60 odd levels. One can look to close long positions at current levels, a double top kind of formation is also being made, but the confirmation will come after a point of time, not really, and that is below the 240 level. So more or less at this point of time, exiting positions is better.
I would like to give an answer on the KPIT Tech. The overall view on this particular stock is definitely positive. We have witnessed a very strong bounce back rally towards 770 levels. But somehow, since the stock has given a very steep rally from 550 to 750, we are likely to witness some sort of a profit bookings at the higher level. Currently, stock is trading at 724. 700 will act as a very strong support level. If it's break that level, then this profit booking is likely to be intensified, which might take a stock towards 650 or so, the support provided by 50 DMA. So those who are having any long position, they can book at least their partial profits at the CMP. And second half quantity, they can hold on with a stop loss of 700. And any more above 750 levels, then only we can witness some positive rally on the higher side towards to 770 to 780 levels. So this is the particular view on the KPIT. I would like to give an answer on this Bombay dyeing as well. Someone is asking the technical view on this particular counter. The chart doesn't look attractive as of now regarding the Bombay dyeing. We are witnessing a continuous selling pressure. The fact is that it is trading below all the important moving average, which doesn't give a confidence sense on the technical front. Downside now, it has a very immediate support at level 82 level. If it's break that level, then the more selling pressure can be seen, and we might likely to witness a selling pressure which might drag a stock towards to 80 to 78 levels on the downside. So not to create any long position at the CMP, the trend will change only above 95 levels. So till the time, avoid the long position into the Bombay dyeing as such. Yes, definitely. We are really sorry that there is a typo error in the SCI, that the stop loss and target figures have been exchanged. I'm just again quoting, the target is 150, stop loss is 160. The current market price of the SCI is 128. So buy at the 128 levels. If you're getting any dips towards to 122, you can add on. We are looking for a target of 150 in this month, and stop loss is 116. That's it.
Yeah, on care ratings, looking at the overall revival in the banking system credit growth, the rating agencies should also benefit from this trend, and it is visible in their results as well. The previous MD of Care Rating has resigned, and post that the stock had declined. But from business point of view, things are looking up, and the revenue is likely to move higher going forward. So it's a value stock. One will have to keep some patience, but stock can do well going forward.
Somebody is asking on JSW Energy on the technical front that whether we should buy at the current market price or not. The trend is positive, definitely, but the stock is just hovering near its 20 DMA. And from the last few trading sessions, almost in the month of the October itself, the stock is just trading within the range of 300 to 330 levels. So as long as this doesn't come out about the mentioned range as such, we will not get a move on the either side. So I will suggest to hold on. If you're looking for any long position, long positions can be initiated only above 330 levels. And if it manages to give a breakout level of that, then 350 levels can be tested on the higher side, whereas on a downside, 310 will act as a very crucial support levels. So as of now, this particular counter is into no trading zone. Just wait and watch. Let the stock gives the breakout, then only you can take a long positions in this particular counter above 330 levels. Thank you.
Yeah, I think there is a question on emphasis for the long-term period. So, Akanksha, if you can take it.
Yeah, so emphasis Q2 FY23 performance was led by 2% QOQs in CC terms growth. Direct business was adversely impacted by the slowdown in the mortgage processing business due to elevated interest rates. Additionally, there was the revenue was also impacted due to some client-specific issues. Overall, on the margin front, the company had retained the guidance of 15.5 to 15.25 to 17%. So outlook is neutral on the company.
Yeah, there is a question on Z. They want the both technical and fundamental view. I'll take that on the technical front. See, technically, looking at Z, it is in consolidation. It is making a little longer term flag kind of a formation. Probably you can call it a triangle formation. But at this point of time, the breakout level is around 290. Once this breakout comes in, only then you will see momentum coming in this counter, and it can probably then witness some buying up to 350 370 odd levels. So the view would be only to buy above that 290 levels, but if you've already bought, you can keep a stop loss of around 255 for your longs. If 255 is broken, you might see some more selling coming in this counter, and it can go down towards the 200 odd level. So technically at this point of time, if you have not bought anything, don't buy it. But if you've bought, 255 should be your stop loss.
Yeah, I would like to answer on the Polyplex, the question raised by Mr. Avish Jain, I guess. Polyplex as of now is the trend is definitely bearish because from the last month of trading sessions we are continuously witnessing a selling pressure from almost 2400 to now it's currently trading at 1700. On the technical front, it doesn't show any kind of a reversal as of now, continuously making a new low. I believe that 1650 will be can be tested in the coming few trading sessions. So just avoid any long positions at the current market price. Once the counter gives the breakout of 1800, then we can see some sort of a pullback rally, which can be carry forward towards to 200 levels, a resistance provided by 50 DMA. But the trend will remain a negative itself, but a small pullback rally can be witnessed into the market. But no major long positions are recommended at the current market price. Coming towards the another question that is on the Balkrishna industry. The technical view on this particular stock has been little bit cautious as such, because from the last few trading session we have witnessed a pullback rally from 1800 to 2011. Now it is trading near the resistance zone of 50 DMA. So if it's cleared at level, then only we can witness some sort of a fresh buying or say the pullback rally towards 2100. So just stay cautious at the current market price into the Balkrishna industry as well, because it doesn't show any kind of a turnaround from this from the current market price. So those who are having any long position, strictly they can keep a stop loss of 1910, and positive momentum can be seen only above 1980 itself. Thank you.
Yeah, there's a question on India Glycol. So if you look at the overall structure, counter looks a bit negative, but on the monthly basis, we are seeing that the stock is at the near long-term support of 670 levels. Once if stock goes below 670 levels, then only more selling can be witnessed. So if stocks drags down below towards 730 to 720 level, it will be a good buying opportunity with the support of 670 level. Once the stock goes above 820 levels, fresh buying will be witnessed on the upper end towards 1100 levels.
Yeah, I'll take up Godrej Properties. See, Godrej Properties, is making a double bottom kind of a formation. Again, the confirmation for the same hasn't come in yet, but the confirmation once comes above 1500 odd levels, this stock can move up quite drastically, and it can go up towards the 2200 levels from a medium term perspective. But from a short term perspective as well, this is a good formation. I believe there can be a reasonable upside up till the 1350, 1500 odd level. So look to buy this stock. You can keep a stop loss around 1160 odd for your longs, and the targets are mentioned. So it's a good stock to have.
There is a question on PFC. So PFC actually, although it is generating decent ROE of 17-18%, but in terms of growth, the loan book is actually then and there since last 7-8 quarters, absolutely flat. So it's a value stock, somebody who is looking for dividend and not for capital appreciation. So one can avoid PFC.
Yeah, I think we'll take the last couple of questions. I'm going to answer on HDFC Life. See, HDFC Life, it is consolidating for quite some time. This consolidation range is in between 510 on the downside to about 600 on the upside. Needs to go above this range, and at this point of time, the lower band, it is near the lower band. So probably it will take another month or so for consolidation, and once it breaks out, you are going to see some buying coming in into this counter. But till then, look to buy only near the lower band. So you can buy once it comes to around 510, 515 odd, and again, as it moves above the 580, 600 levels, you can look to sell it as a short-term measure. Yeah. So I think more or less.
Yeah, I'll take up on Birlasoft. Although the company has posted below expectation numbers for the quarter, for the year, the company had maintained its revenue growth guidance of double-digit growth and margin guidance of 15 to 17% in long term. Management had a positive outlook for the BFSI vertical, but weak outlook for the license and the energy utilities. Majority of the IT companies has guided for near-term softness and are cautious about the demand environment for the future. So looking at the future, outlook is neutral on Birlasoft. Thank you.
Yeah, then I think that's it from our side. Any more questions, please email it on research@nirmalbang.com. We'd answer it back via email. So good to have you all. Thank you very much.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.